We've recently seen the interest rate for a 30-year fixed rate mortgage hit a record-breaking 7.89%. And in this quick video, we're going to take a look at the other recent changes in the Victorville Hesperia real estate market and see exactly what we can expect the real estate market to do in the next few months. My name's Dave Rupp, also known as Dr. Hot Rod the Realtor. I'm a Southern California real estate agent at Exp Realty. All my contact information is in the description below. Feel free to reach out with any real estate related questions whatsoever. Now let's start with the most current sales statistics for the area. The current average sale price for a house in Victorville, California, $429,176. And for Hesperia, it's $429,904. To put that in perspective, that's only $5,345 less than the record high average sale price for Victorville, which was set in July of 2022 when the real estate market hit its peak or highest point. Now for Hesperia, the recovery is coming a little bit slower. Hesperia is about $39,392 below its highest point or peak. But it is still recovering, and it is $15,651 above the low point in the early part of 2023, and is forecast to continue to grow throughout 2024. Now looking at the number of units or the number of homes actually sold, 2023 nationally is projected to be about 2 million homes less than the lowest number of homes in the last 4 or 5 years. That's pretty significant. So here locally in Victorville and Hesperia, we're seeing the lowest number of homes sold per year in over 20 years. And that's the same nationally as well. The next statistic or data point that we want to look at is the percent of sale price compared to the original list price of the home. Right now we're running 99 to 100%. That's pretty awesome. That means that sellers are not reducing their price from the original price that it hit the market, but by max 1% on average. This data point indicates a strong seller's market. Going along the same lines is that we have days on market, or another way to say that would be the time difference between when you actually put your house on the market and somebody signs and writes an offer and you accept it and sign and you have a deal. Right now, we're seeing 31, 32 days, which is a very short, again, seller's market type of statistic. Next up, we have absorption rate, also known as month's supply. What that is the number of houses that are on the market right now. If nobody else put a house on the market for sale, how long would it take to sell those houses? So say there was 50 houses available right now for sale. If the current rate of sale is about 25 houses a month, then it would take 2 months to sell those 50 houses. So the absorption rate, or also known as month supply, would be 2 months. Absorption rate is usually done in a percentage, but the bottom line to it is we're looking at how much time would it take to sell the houses that are there. Right now we're at 2.4 months supply in Victorville and 2.7 months supply in Hesperia. Those are still very low numbers and still solid seller's market numbers. Next, let's look at the number of available homes for sale right now. In Victorville, 324, and Hesperia, 204. Now that may sound like a lot to you. Normally, over 15 years, we'll probably average somewhere between 750 and 1,000. And in 2018, we had 2,760 in Victorville and 1,730 in Hesperia. So our numbers at 324 and 204 are pretty low. Okay, so let's put all these data points together. We've got near record low inventory, near record low number of houses being sold. We have strong house prices still because of that low inventory. We have houses being sold rather quickly, about 31, 32 days. And we have a month's supply or absorption rate of only 2.5 months. All these data points are telling us we're in a strong seller's market still. But we've got these pesky interest rates pushing near 8%. Most of the mortgages right now are locked in a 30-year fixed at less than 4%. So people don't really want to trade out that 4% rate and go buy another house and end up with dang near 8%. It's killing us. In addition to that, home affordability is at an all-time low. We've got interest rates 8% almost, and you've got the home prices holding strong, almost near record highs. So the two of those working together make it really hard to buy a house unless you're just really well off. All right, so what can we expect in the coming months? Well, in the next couple of months, don't expect the Fed to drop the interest rate anytime soon. They haven't said that they're going to yet. Furthermore, we got a jobs report recently that shows a little stronger than what we had expected. And when the jobs market is strong, then the economy is starting to look like it's recovering, and the Fed doesn't want it to recover too quickly. They were looking for a 2% inflation rate. We got down to 3.7, and they're watching the numbers and they're not liking what they're seeing yet, so they're not ready to even say they're going to stop raising rates. So we still may see another rate increase. So next few months, 2-3 months, we're going into holiday season. It's typically slower in holiday season anyway, so what the data points are telling us, what history is telling us with the normal holiday season, we can expect a slowing down still further yet from what we've seen as far as the number of houses sold, as far as maybe even the time that it takes to sell a house. It's bargain season. If you're in a good cash position and you're looking to buy something, this probably next couple of months is a good time to be buying. If you had a situation where you can qualify for the loan at 8% or whatever the rate is at the time, it's not a bad play to go out and buy something while the prices are still relatively low and hope the interest rates go back down. If they do, which all the economic models are projecting that the interest rate will drop because the measures the Fed put into place some 12 or 13 months ago typically take a year to a year and a half for them to start working. They are working. They are lowering inflation. It's expected the Fed will lower the rates to keep us from going into a hard recession and give us what they want, a soft landing. So if in fact that does happen, look for it to happen around 6 months out, maybe springtime, something like that. If that does happen, look for a lot of people that are holding those 4% mortgages that have been wanting to move but haven't wanted to because of the 8%. If your interest rate starts dropping down to the low 6s, I see people starting to jump and get into the market again. So that would cause the values to start going up again because our inventories are still really near record lows. And it's also going to cause bidding wars and problems with inventory. So the choices are going to be lower, the prices are going to get higher. If the interest rates go down and you bought in the next couple of months, you could then refi and drop out of that 7.5 or 8% and get down into your 5.5 or 6 or whatever that rate drops down to. That's a good move. It is speculative. If the rates don't go down and we just end up living with those 8% rates, if you go into it that way, you better be prepared to pay that for the 30 years because you just never know. My name is Dave Rupp, also known as Dr. Hot Rod the Realtor. If you have any real estate related questions, all my contact info is in the description below. Love to hear from you.